All right, for everyone just joining us, welcome. We appreciate you being with us here today to discuss one of our favorite topics. It's the basics of down payment assistance programs. We'll be touching base on what these programs have in common, how they differ, and most importantly, what you need to know to begin conversations about down payment assistance without necessarily feeling like a program expert. But you will leave as an expert after today, definitely. My name is Will Medina. I'm part of our DPR team. We also have with us today Melinda Harris, our Director of Marketing and Communication, Lori Johnson, our Customer Success Specialist, Keith Futrell and Kathy Galt, two amazing DPA program specialists. Everyone will be answering questions in the background, so feel free to use the Zoom Q&A feature to engage with them as we go. We actually find that it's easier to track and engage with your questions using that feature, but we're also taking a look at the chat. And just as a quick note, a recording of today's webinar will be sent to everyone. So first, a little about who we are. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. And it's actually something that we still drives them crazy today. There was no easy way to find and track homebuyer programs. So DPR developed an easier way to connect eligible borrowers with hard to find resources such as down payment assistance programs, grants, mortgage credit certificates, and other forms of assistance that we will cover today. Overall, we provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions that are out there for your buyers. Ultimately, we like to say that we are here to help you connect home buyers to the down payment help that they need. So today, as mentioned, we will be discussing the basics of these programs, these loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, help cover closing costs, and get them into a home sooner than they would have been able to otherwise. So we always like to take stock of the current state of home buyer assistance programs. The infograph is taken from our recently published homeownership program index report, Q4 of 2025, which we'll get into a greater detail later on. But just as a quick snapshot of all the homebuyer programs out there, 74% are some sort of down payment or closing cost assistance. Now, that's really a catch-all category. We'll dig deeper in a few minutes, but it's important to know that not all DPAs are the same. 80% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 53% are forgivable, partially or fully, essentially becoming a grant over a period of time. And 51% are both deferred and forgivable. And then there are still other down payment assistance programs that are considered true grants at closing or are repayable monthly after closing. Now, we'll explore each program type in more detail, as well as the affordable first mortgages and tax credits, or as they're also known, mortgage credit certificates, in a moment. So these programs are everywhere. Some markets obviously have more homebuyer programs than others, but there is a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of DPA or other form of home buyer assistance. Now, who funds and administers these home buyer assistance programs? So I just mentioned that every state has at least one housing finance agency. There are city and county governments, which often have community or economic development departments or housing authorities, a number of nonprofits, as an example, NeighborWorks and Neighborhood Housing Services and others operate in markets across the country and have varying programs. Many employers, such as municipal governments, hospitals, universities, also offer their employees some form of down payment assistance. There are community action agencies, community land trusts, and so many other organizations out there that are all trying to open new doors to homeownership and, most importantly, promote housing growth and responsibility in their market, which is also your market. And they've all got funded and available down payment assistance programs. So let's take stock of current trends. We continue to see that demand for these programs is through the roof. Providers are increasing assistance amounts, income limits, and purchase price limits to help more home buyers in today's market. There are new state and local programs that continue to launch in markets across the country, and approximately 80% of all DPAs are funded and available. So it is very important to note that down payment assistance is available and is not going away. Now, as mentioned, we just released our homeownership program index report for Q4 2025, which tracks the home buyer programs within our directory. Something to note is availability remained near record levels in Q4, reaching over 2,600 programs, 6% higher than a year earlier. In addition, we noted growth in affordability in the following areas: programs that support first-time home buyers, programs that support first-generation home buyers, and most importantly, programs that support repeat home buyers. We also noted increases in inventory options, which included support for new construction properties, multifamily properties, and manufactured housing. Now, all of these programs share some basic universal requirements. As an example, they are only for owner occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties as long as they will occupy one of those units. Now, they all still require some minimal investment from the buyer to keep a little skin in the game. As they say, the investment can take the form of a monetary investment, which can range from five, maybe to $1,000, perhaps more. And let's not forget that the buyers are also investing time, as an example, by completing their home buyer education requirement, which buyers typically complete, of course, to qualify for a home buyer assistance program. Of course, these are not cash buyers. We are talking about buyers financing their home with a mortgage. So they have to qualify for a mortgage as well. So, with those universal requirements in mind, let's now take a look at the three most common types of home buyer programs and what's unique about each of them. Now, the three most common types of home buyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. And please remember as we go that no two programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So I'd like to begin by reviewing down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. So I always like to begin with the top. So let's take a look at grants, the example on the graph on the right side. So grants are gifts that do not have to be repaid. We then have repayable seconds, where funds are provided at closing that may or may not accrue interest, and the loan could range from 5 to, say, 30 years with varying repayment terms. We have deferred or silent seconds, where repayment of the original amount is postponed until one of several events occurs, typically referred to as a trigger, repayment trigger. Commonly when the borrower sells, refinances, or there's a change in occupancy. And lastly, we have forgivable seconds, where some or all of the original down payment assistance is forgiven. Often, a percentage of the loan is forgiven each year for a predefined number of years. As an example, it's common for a forgivable DPA to be forgiven, let's say, 20% per year over the course of 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses, rehab, or even repairs, which can be particularly important to enhance the property or to accommodate livability standards for disabled buyers, and even loan principal reductions. Now, all of these uses help the buyers shed the costs of purchasing and financing a new home. And we're even seeing more programs allow their funds to be used for temporary or permanent interest rate buy downs. Now, one of the most common misconceptions about down payment programs is that buyers must be first time buyers. In fact, there are over 2,600 programs across the country maintain a down payment resource, and about 40% of them have no first time home buyer requirement. Now, beyond that, most programs adhere to HUD's definition of a first time home buyer, which effectively states that you're a first time home buyer if you have not owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we continue to see programs that waive the first time homebuyer requirement in targeted areas, perhaps make exceptions for veterans or certain professions, or in many cases just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and pocket a little extra cash upfront and along the way for other homeownership obligations. Many of these programs are grants, meaning they are interest free, payment free gifts to buyers who meet the eligibility requirements. Others may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So, as an example, many programs stipulate that the buyer occupy the property for a certain number of years. That could be between 3 to 10, just kind of as an example. And then the lien is forgiven, essentially becoming a grant. And for those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs. So, what are the eligibility requirements? Well, we found that most have the following. Eligibility depends on the program and the funding sources, most importantly. Income and purchase price limits are always market adjusted, often based on calculations for the area median income. But basically, they all have income limits ranging from 80% all the way up to 140% of AMI, and sometimes even higher, which can creep into six-figure incomes in some cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries. We're talking city or county limits. But it's important to remember that the programs from your state housing finance agency offer assistance statewide, meaning it covers your entire market. We have some nationally available programs integrated into down payment resource, as an example. Now, some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, requiring a FICO score of 620 or higher. Homeownership history makes a big difference as well. Many programs, as mentioned, are only for first time home buyers, but there are many for repeat buyers or even current owners. And remember that a first time home buyer is simply someone who has not owned in the last 3 years. I will expand on eligibility as it pertains to military service and certain professions in a few moments, but both of those can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out of pocket expenses and, most importantly, to retain their liquid savings. As an example, let's think of someone obtaining FHA financing, right? Putting 3.5% down. If a down payment assistance program potentially helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. We're talking specifically an FHA mortgage, right, has very high upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan. Whereas conventional mortgages have no upfront mortgage insurance premium and lower MI premiums that can be canceled once the buyer gets to 80% loan to value. When you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra to suit their family needs. Of course, reducing monthly payments also allows for a little extra cash every month to dump into savings, which has been shown to improve default rates. Now, many down payment assistance programs require the buyer complete a home buyer education course, which provides valuable information about the home buying process and the resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. And more down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. What I mean by that is most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre approval and then hit the market as more competitive and informed shoppers. And we always like to stress that these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. So now I'd like to take a look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you will see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher loan to value. You can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those same housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers through lowering monthly payments, excuse me, through lower rates or mortgage insurance pricing, which helps increase the purchasing power of each buyer and can potentially expedite homeownership for them. As we like to say, getting them into a home sooner than they would have otherwise been able to. So now let's take a look at the third of the most common homebuyer programs, the Mortgage Credit Certificate, or MCC as it's also called. The Mortgage Credit Certificate is available from state and local housing finance agencies in some states. Not every state offers an MCC, but if there is one in your market, we suggest you take a look. They are a great benefit for home buyers. The MCC offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage interest costs, and you still get to deduct the rest of the mortgage interest you paid each year. Now, MCCs help reduce the buyer's federal income tax liability. by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's take an example of how a mortgage credit certificate works. Let's take a $200,000 home. The buyer closes and makes 12 payments in the year. They've paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit, so $2,000 for this example. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. Now, we love case studies here at DPR, and here we have a recent case study in collaboration with Loan Depot. It details the success originator Mosaic Gatling has had engaging partners to explore affordable mortgage solutions for home buyers. The visual is regarding layering two Nevada Rural Housing Authority's programs, a down payment assistance program, and an MCC in this example, of course, if and when conditions permit. The example depicts the potential savings when exploring affordable mortgage solutions for your home buyers. So I'd like to wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or even unique benefits for your clients. Now, there are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment or targeted for community investment. Typically, there will be no first-time homebuyer requirements. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea here is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. These targeted areas are all over the map, not just in big cities. These areas are usually bounded by specific zip codes, cities, or census tracts, or maybe sometimes entire counties. Now, there are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. For example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers, but teachers, police officers, and nurses can get an additional $2,500 for a grand total of $12,500 in down payment and closing cost assistance. Now, again, the idea behind these programs is to enable homeownership among local core service providers. And it's important to mention that many of these programs have very broad definitions of terms, like educator, which can include not just classroom teachers, but public school system employees at large. So we're talking paraprofessionals, librarians, school nurses, or the term protectors could include police officers, sheriff's deputies, corrections, probation officers, and more. Now, another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans, some even offering higher assistance amounts. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite their homeownership history. Some of these programs offer the same or similar incentives to active military and Guard or Reserves members. Now, we've given you a lot of information today, but we want you to know how to access all of these DPA programs once you leave today's webinar. So I'll be showing you a number of ways you can access DPA info and start to enhance your marketing, right? Enhance your outreach. So anyone here can go to downpaymentresource.com and run an eligibility search for free anywhere in the country to see what's available for you or your client. If you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available home buyer assistance programs. And we provide these matching tools within your MLS agent and client portal listing reports. You also get Down Payment Connect for free through some of these MLS partnerships. So we ask that you check out DPR, most importantly, to let your clients know what's available and also talk to your lending partners about which programs they may offer. And of course, we ask that you let us know if you have any questions along the way. As always, we are continuing to expand our partnerships with MLSs throughout the country, and several more will be launching with DPR. So if you are a member of one of the partner MLSs, when you are logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. It's as easy as clicking it, and we will tell you or your client which programs are available for properties that they are interested in the most. Now, Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you too can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. Loan officers, for those of you on this call, we have a version for you as well, which allows you to control which programs consumers see so that you are better aligned with the product offerings at your company. So you may be asking, what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your own personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs within your market. You can use that personalized Down Payment Connect link on your website, in your email marketing, and across social media as well. And just to be clear, you are not purchasing leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to help generate your own leads. And nobody else gets your leads, just you. So we certainly encourage you to get creative, right? Reach more buyers and educate them about these opportunities available in your market. We would also love for you to join our growing Facebook group, Down Payment Insiders. There you can join over 14,000 real estate agents, loan officers, housing counselors, and even DPA providers as they all discuss best practices with down payment assistance programs, with first-time home buyers, even working with lenders, or everyone just learning from each other, right? Exchanging marketing ideas. So we urge you to listen in or participate in the dialogue and engage with your peers within the Facebook group. We've also found it's a great place to network and connect with loan officers, which I know is a question that we get often that offer DPAs in your markets. And it's also a place where we love to post updates regarding our research or just anything DPA adjacent. So feel free to connect with us on Down Payment Insiders. Now, I'd like to leave you with a case study that beautifully illustrates how important DPA info is for realtors and home buyers. Amber here was a new agent in Florida. No one was helping her peers understand down payment requirements, as many of them began to explore homeownership. So she stepped in and learned all about DPAs and built her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. So we urge you to tell their story. Help them, and they will refer their family members and their friends. In closing, please feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. And we are going to be sticking around a few extra minutes just to answer some additional questions. But again, we appreciate you being here with us today. So I'd like to pass the mic off to our team and see if there's anything in particular they feel they would like to address. And see what's in the Q&A.
Hey, Will, I can tell you some of the questions that are pending here, and maybe anyone can chime in. But one of the questions came from Pamela. She says, "Hello, I heard that VA has an assistance program for vets toward an investment program. Have you heard of that program? And if so, can I get more info on it?"
Thank you, Lori. Thank you, Pamela. Probably not the best answer. I have not. However, this is something I can certainly look into and we can get back to you. But thank you for bringing this to our attention.
Pamela, you can email us at info at down payment resource with anything that we're not able to answer today, and we can look into it for you and get back to you. I'm gonna put the email in the chat and in the Q&A.
Thank you,
Oh,
Lori.
yep. Another question we had was from Alex. Do the clients have to pay back the money they get when they sell or refinance their homes, or this non-refundable money? This is a great question. Will, do you want to address that?
Sure, sure. Thank you. It will certainly vary depending on the program. As mentioned, some funds will be repaid over a certain period of time. Some funds are forgivable but can be repaid if there is a repayment trigger, like if the home is sold during the affordability period, if there's some change in occupancy. So very important as you're reading through the program requirements to see what type of repayment terms apply or that assistance. But yeah, it will certainly vary.
And then, is there an educational video that I can send to my clients to educate them on DPA?
Awesome. Thank you, Kathleen. Well, I'd be remiss if I didn't mention we have a YouTube page where we upload at least a few webinars, DPA 101 being one of them. So I know this kind of gives a brief overview. We also have a blog on our website. In some cases, we're not just talking about the entire team that is involved in purchasing the home, but sometimes some of the things home buyers should be looking out for, and some of that involves talking about down payment assistance programs. But that is really another creative way for, you know, another good reason to maybe join Down Payment Insiders. I know there's a lot of agents on there talking about some of their marketing techniques, so they might have some examples of videos that they are doing. But so long as we are, tagged, I should say, it'd be great to see. Maybe you have an example of what a video like that might be. So we certainly encourage a lot of these great ideas to help market these programs to your buyers.
Okay, then we have from Lewis, what is the best way to find out if a condominium community is qualified for DPR? Because I know not a lot of them are.
Great. Thank you, Luis and Mel. I'll just address this quickly, and I know you had something uh, to add. So that will certainly depend on whether or not a condominium is a qualified property, which some of these DPA programs have requirements as to what can be purchased: single family, detached, townhome, manufactured home. So if they permit a condo, that would be a good start. But if there are any additional restrictions, um, certainly their requirements would outline those as well. But I will kick it over to you, Mel.
Yeah, thanks, Will. I just wanted to add too that we definitely always get this question a lot, and just wanted to clear up for everybody that we did record this session, and we will be sending that out along with the presentation slides. You should have that in your inboxes within the next few days. Also, while we're on the call doing Q&A, guys, chat is wonderful, but it's just tough for us to keep up with. So if you don't mind, if you have questions, put it in the Q&A. That is works much better, and we don't want to miss anyone. So just go ahead and put it there. But I did want to just address a couple of things that had come up in chat. One was from Aisha. How does it work for a lender to participate? Aisha, I'm assuming that you're asking how does it work for a lender to participate with down payment assistance in general? And if that is your question, we get that question from real estate agents all the time, wanting to find a lender that works with DPA. Most of these programs have a list of participating or approved lenders, and loan officers can work with the program provider to get on those lists. But if you're looking specifically for a lender that does DPA, I think everybody on this call would probably give you different advice, but there's a lot of places you can go. I usually tell people to start with who they know and just ask with lenders that you're familiar with. Also, your state housing finance agency, wherever you're located, is going to have a really well curated list of lenders that they work with. And if those lenders are familiar with state programs, they're generally going to be familiar with local or, local or other DPA programs in your state or in your area. So I would start there. And that's all, Will. I also wanted to point out that everybody was very appreciative of you telling them that you loved them. So
Yeah.
we had a couple of comments in chat. So
It
happy
was
Valentine's
a
Day,
it was a
everyone.
Freudian slip. So obviously it's close to Valentine's Day. There's a lot of love in the air, so it was
That's
going to
right.
come out. I did want to mention, Mel, having you and Lori on this call. There are a lot of questions related to the personalized link and following up on leads. I know we're talking about DPA 101 here, but what's the best way for them to follow up with some of those questions or other educational materials that might help them um, with that kind of information, like their marketing and so on?
Yeah, it's a great question. And I see some of them now. Shelly, specifically, you are a member of FMLS who is a partner with us. You can find our resources. Most everyone generally is, if you are a partner or you are a member or subscriber of one of our partner MLSs, you can generally, when you are logged into your MLS, you can find a link to down payment resource on your MLS homepage. So that is going to take you to our member dashboard, which is going to give you all of this fun stuff Will was talking about today. You can search for programs, you can access your Down Payment Connect link. We have marketing resources and such there as well. So again, if you're a member or subscriber of our partner MLSs or one of our partner MLSs, you can find us on your MLS homepage. Just make sure you're logged into your MLS and you can find us there. And then we will also be integrated into your MLS software, whether it's Matrix, Paragon, whatever your MLS uses. We will tag listings as well. So you'll see our icon on listings and you can see how those properties might be eligible for DPA. So I would honestly, in short, if you have questions about Down Payment Connect or you have questions about your, DPR's functionality with your MLS, definitely do not hesitate to reach out to us on the email address that Will had at the end of the presentation, the info at. There's several people that are kind of a part of that email, so someone will get back to you ASAP. But we do have specific MLS trainings that we can share with you, and then we also have some Down Payment Connect training that we can share with you as well. So just reach out to us, and we're happy to help.
Thank you, Mel. I appreciate that. It's certainly not us wanting to be, dismissive of any of these questions, but we, want to make sure as client partners in general that we address your concerns or questions as accurately as possible. So thank you, one, for joining and for submitting, and we look forward to kind of touching base with you on that back end. There's a few questions here. So I have a client that applied via my personalized link. They've received 41 options. Now, what do we do? I would presume at that point it's, really narrowing down the options that you'd be interested in pursuing, and then most importantly, reaching out to those providers first and foremost. I know some of them, like to get in front of the client before anything else gets done to see if they would even qualify. So that would certainly be a great next step. It's just choosing a few of those programs and kind of reaching out to them to see how to get that process started. With respect to marketing the Down Payment Connect on social media and any legal information or disclaimers to be compliant, I would say that's, well, Mel or Lori, I know there's a lot of experience between the both of you there. So Any suggestions there?
Yeah, so Jonathan, it wouldn't be it would be up to your organization if they have any disclaimers or any legal information that would be needed to be compliant. I know that our Down Payment Connect subscription, um, our Down Payment Connect subscribers, I'm sorry, especially our lender subscribers, do have some customizable spots where they can put in some disclaimers and other legal info. But yeah, it would be everything that we need is there. So anything additional you would just need to add with your link.
Thank you, Mel.
Mhm.
Um, let's see here. I'm just working from bottom up. Marlon, the current interest rate today, I know it's floating down near the low sixes. Hopefully it stays that way, but I don't know exactly today. I know Mortgage News Daily publishes a pretty good graph, so that would be a good website. Our materials say if you're a member of one of our MLS partners, you already have access to your own basic version of the Down Payment Connect landing page. What extra is offered beyond basic? Um, is there anything in addition to that, Mel? I'm reading a question from first name Eddie.
Yeah, so Eddie, so there is there are just a couple of personalizable I have no English today. Spots for our subscribers. For example, you can add a logo, you can add a photo, but honestly, the basic version of our Down Payment Connect tool and the subscriber version um, are pretty similar as far as the consumer experience goes. The subscriber version, you do also get a lot of backend. You get some backend support, meaning you get your own dashboard, you have reporting, and you have some other features that the basic one doesn't have. But yeah, they're fairly similar.
Thank you, Mel. Does down payment, Marlon again, coming in with the great questions. All right. Does down payment assistance have a fee? That will certainly depend on the provider. That is something that we certainly track here as well, whether or not there's a fee charged specifically or whether a lender can charge a fee originating with the down payment assistance program. Um, so that is program specific. I know that's a little broad, but that would be the best way to phrase that. They updated. So the programs are reviewed on a monthly basis, Sabrina. Um, and obviously, sometimes things change rather quickly. So if a program was not available, that could be due to just funding being run out. I know at the moment there was a lot of questions with respect to funding for certain government funded programs, but everything seems to be par for the course at the moment. But thank you for your question. Are these programs geographic or nationwide? They apply really to all 50 states, so that based on that geography. But yes, nationwide, absolutely. Great question. Can these programs be used for 5 or less units? I have not come across that. Um, I'm curious if anyone else on our team has come across something like that. I have not seen that. It, it'll usually go 1 to 4 units. Luis, if you're addressing that to, is there something in there? I think there's something. Oh, okay. Somebody's reaching out to the great Keith. Let's see here. Okay, everyone, we certainly appreciate the engagement today. It's something that we love. For anything that may not have been answered today, again, feel free to reach out to us at info@downpaymentresource.com. This webinar occurs quarterly, so we will see you again. But if you'd like a refresh, again, information will be sent to you, but it's also posted, one, on our website, and then two, on our YouTube. So both places, we urge you to check them out, and we wish you all a great rest of your day. Thank you again for being with us.